English Podcast Hub. Hi, everyone. I'm Mia,
And I'm Mark.
and welcome to English Podcast Hub. We're so excited you're here because, today we're starting something really special, a brand new series called Essential Life Skills.
That's right. And if you're learning English, you probably already know that it's not just about grammar and vocabulary. It's about being able to actually do things in English, like go to the doctor, order food, or, and this is a big one, deal with banks.
Oh my gosh, yes. Banks can be so intimidating, even in your own language, right? So imagine trying to navigate all of that in English. That's why today we're diving deep into bank English for beginners.
We're going to cover everything you need to know to walk into a bank with confidence. We'll talk about opening accounts, understanding the difference between checking and savings, using ATMs like a pro, and of course, all those essential banking terms that can sound really confusing at first.
And don't worry, we're keeping this super casual and fun. Think of this as two friends chatting over coffee, not a boring textbook lecture. So grab your headphones, get comfortable, and let's jump right in. Okay, Mia, so let me ask you something. If you were going to open a bank account today, would you open a checking account or a savings account? That's a good question. To be honest, I'm not even 100% sure what the difference is. I mean, they're both bank accounts, right? Can't I just pick one and, put my money in there?
Well, you could, but here's the thing. They're designed for different purposes, and if you pick the wrong one, you might end up paying extra fees or missing out on earning interest. So let me break it down for you in the simplest way possible.
Yes, please. Simple is good.
All right, so think of a checking account as your everyday spending account. It's the account you use to pay bills, buy groceries, swipe your debit card at the coffee shop, basically all your day-to-day transactions. You can access this money super easily, and you'll probably make a lot of withdrawals and deposits.
Okay, so it's like my wallet, but in bank form.
Exactly, great analogy. Now, a savings account is different. This is where you put money that you don't need to touch right away. It's for your future goals. Maybe you're saving for a vacation or an emergency fund or a big purchase like a car. The key thing is you're not supposed to be constantly taking money in and out.
Oh, I see. So it's like a piggy bank where you let your money grow?
Perfect. And here's the cool part. With a savings account, the bank actually pays you a little bit of money just for keeping your money there. It's called interest. Now, it's not a ton of money, but over time it adds up.
Wait, so the bank pays me? That's awesome. Why doesn't everyone just use a savings account then?
Great question. The catch is that savings accounts usually have limits on how many times you can withdraw money per month. And if you need quick access to your money all the time, like to pay rent or buy groceries, a savings account isn't practical. That's why most people have both, a checking account for daily expenses and a savings account for their long-term goals.
Oh, that makes so much sense now. So it's not about choosing one or the other. It's about using them together for different purposes.
Exactly, you've got it. And when you go to the bank, the teller will actually ask you which type of account you want to open based on your needs.
Okay, that was fun. And honestly, it felt way less scary when I knew what to expect.
Right? And that's the whole point of this episode, to help you feel prepared and confident. Now, let's talk about something super practical that you'll use almost every week, the ATM.
Oh, yes, ATMs. I mean, I know how to use one, but I feel like there are so many terms on the screen that I don't fully understand. Like, what's the difference between withdraw and transfer?
Great question. Let's go through the most common ATM terms one by one. First up, withdraw. This is when you take money out of your account. So if you need cash to pay for something, you'd select withdraw and choose how much you want.
Okay, that one's pretty straightforward. What about deposit?
Deposit is the opposite. It's when you put money into your account. A lot of modern ATMs let you deposit cash or checks directly without going inside the bank. You just insert the money or check and it gets added to your account balance.
Oh, wow, I didn't know you could deposit checks at an ATM. That's so convenient. Okay, next one. What's a PIN?
PIN stands for Personal Identification Number. It's your secret code that you enter at the ATM to access your account. Think of it like a password, but it's usually just 4 digits. And here's a pro tip. Never share your PIN with anyone, and try not to use obvious numbers like your birthday.
Good tip. Okay, last one. And this one sounds a little scary. What's an overdraft?
Ah, yes, overdraft. This happens when you try to spend more money than you actually have in your account. For example, if you have $50 in your checking account, but you try to buy something for $60, that's an overdraft. Some banks will let the transaction go through but charge you a fee, usually around $30 or more. Other banks will just decline the transaction.
Yikes. So basically, I should always keep track of my balance to avoid overdraft fees?
Exactly. And a lot of banks have mobile apps now where you can check your balance in real time, so there's really no excuse to overdraft anymore. Just make it a habit to check before you make a big purchase.
That's really good advice. Okay, so before we wrap up, I want to do a quick level up moment. Mark, can you give us some phrases that sound more professional or natural when talking about banking?
Love it. Okay, so instead of saying give money to the bank, you can say deposit funds. Instead of take money out, say withdraw cash or make a withdrawal. And instead of move money from one account to another, you can say transfer funds.
Ooh, I like that. It sounds so much more professional. And you know what? While we're on this topic, can we talk about some common banking mistakes that people make? Because I feel like there are some things I probably do wrong without even realizing it.
Oh, absolutely. This is important because these mistakes can actually cost you money. The first big one is not keeping track of your account balance. A lot of people just swipe their cards without checking and then boom, overdraft fees.
Yeah, we talked about overdraft, and those fees are no joke. What else?
Another common mistake is ignoring your monthly bank statements. I know it sounds boring, but you should review your statement every month to make sure there are no errors or unauthorized charges. Sometimes there are small charges that you don't recognize, and if you catch them early, the bank can help you dispute them.
Wait, so the bank sends me a statement every month? What exactly is that?
Great question. A bank statement is basically a summary of all your account activity for that month. Every deposit, every withdrawal, every purchase you made with your debit card. Most banks send them electronically now, so you'll get an email or you can check it through your online banking app.
Oh, okay. So it's like a report card for my money?
Exactly. And speaking of online banking, that's another mistake people make, not setting up online banking. It makes your life so much easier because you can check your balance anytime, transfer money between accounts, pay bills, and even deposit checks by just taking a photo of them.
Wait, you can deposit checks with your phone? How does that even work?
Yeah, it's called mobile deposit. You just open your banking app, select deposit check, take a photo of the front and back of the check, and enter the amount. The money usually shows up in your account within 1 or 2 business days. It's super convenient, especially if you don't have time to go to the bank or find an ATM.
That's amazing. I had no idea banking had become so high tech. Okay, what's another mistake people make?
This one's important, using out-of-network ATMs. Every bank has a network of ATMs that you can use for free. But if you use an ATM that's not in your bank's network, you might get charged a fee, sometimes by both your bank and the ATM owner. So you could end up paying $5 or $6 just to withdraw your own money.
What? That's crazy. So, how do I know which ATMs are in my network?
Your bank will tell you when you open your account, and most banking apps have an ATM locator feature that shows you the nearest free ATM. Some banks also reimburse ATM fees if you maintain a certain minimum balance, so it's worth asking about that when you sign up.
Good to know. Okay, one more question before we move on. What about debit cards versus credit cards? I know they're different, but I always get confused about when to use which one.
Oh, this is a big topic. Let's break it down simply. A debit card is connected directly to your checking account. When you use it, the money comes out of your account immediately. So if you have $100 in your account and you spend $30, you now have $70.
Okay, that makes sense. So it's basically like using cash, but in card form.
Exactly. Now, a credit card is different. When you use a credit card, you're actually borrowing money from the credit card company. At the end of the month, they send you a bill and you have to pay it back. If you pay the full amount on time, there's no extra charge. But if you only pay part of it, they charge you interest, which can be really expensive.
So with a debit card, I'm spending my own money, but with a credit card, I'm borrowing money that I have to pay back later.
Exactly. And here's why this matters. If you're trying to budget and control your spending, a debit card is usually safer because you can only spend what you actually have. With a credit card, it's easy to overspend because it doesn't feel like you're using real money in the moment.
Yeah, I can see how that would be tempting. But is there any advantage to using a credit card?
Definitely. Credit cards often have rewards programs like cash back or travel points. And they also help you build your credit score, which is important if you ever want to get a loan for a car or a house. Plus, credit cards usually have better fraud protection than debit cards.
Ooh, what do you mean by fraud protection?
So if someone steals your credit card information and makes unauthorized purchases, it's easier to dispute those charges and get your money back.
With a debit card, the money comes out of your account immediately, so it can take longer to get it back while the bank investigates.
Wow, I didn't know that. So it sounds like both have their pros and cons.
Exactly. A lot of people use both: debit for everyday purchases and credit for bigger purchases or online shopping where there's more risk of fraud.
This is all so helpful. Okay, last thing I want to cover. What are some questions people should ask when they're opening a bank account? Because I feel like when you're sitting there with the bank teller, your mind goes blank and you forget to ask important stuff. Such a good point. Okay, here are the must-ask questions. First, are there any monthly fees and how can I avoid them? Some accounts charge a monthly maintenance fee unless you meet certain requirements, like maintaining a minimum balance or setting up direct deposit. Direct deposit, that's when your paycheck goes straight into your account, right? Exactly. Instead of getting a paper check that you have to deposit yourself, your employer sends the money directly to your bank account. Most banks love this because it means regular money coming in, so they'll often waive fees if you set it up. Got it. What's the next question? Second question, what's the interest rate on the savings account? If you're opening a savings account, you want to know how much interest you'll earn. Some banks offer better rates than others, so it's worth comparing. Makes sense. What else? Third, is there a fee for using ATMs, and how many free ATM transactions do I get per month? We talked about this already, but it's super important. Fourth, what happens if I overdraw my account? You want to know exactly what the fees are and if they offer overdraft protection. Overdraft protection? What's that? It's a service where the bank will transfer money from your savings account to cover an overdraft in your checking account, or they'll give you a small line of credit. It's not free, there's usually a fee, but it's cheaper than the standard overdraft fee. Okay, so it's like a safety net. Exactly. And the last question you should ask, what do I need to do to close the account if I ever want to? I know it sounds weird to ask this when you're just opening an account, but some banks make it really difficult to close accounts, and there might be fees involved. Oh, wow. I never would have thought to ask that. These are all such good questions. Everyone listening, write these down. Definitely. And don't be shy about asking questions at the bank. It's their job to help you, and a good bank employee will be happy to explain everything. Absolutely. And honestly, after this conversation, I feel like I could walk into any bank and handle the whole process with confidence. All right, everyone. If you've made it this far, you're basically a banking pro now. We really hope this episode helped you feel more confident about banking in English. Remember, the key is just knowing the vocabulary and understanding the process. Once you've done it once or twice, it becomes second nature. Absolutely. And hey, if you enjoyed this episode, please don't forget to subscribe to English Podcast Hub. We've got so many more essential life skills episodes coming your way, from doctor's appointments to job interviews to ordering food like a pro. And if you have any questions or topics you'd like us to cover, drop them in the comments or send us a message. We read everything and we love hearing from you. All right, everyone. Thanks so much for listening. I'm Mia. And I'm Mark. And we'll see you next time on English Podcast Hub.